What do I not want on here? I definitely still want space on here. Tesla we gotta watch today. I don't know that DGLY is going to do anything. I think I want BlackBerry on here instead of DGLY today, to be honest. Et voila. All right, all right, all right. Let's do this. Market, she opens and 5 minutes here. So let's go there. And let's take a look at what's doing what here. Here's the good RX IPO. This is what Martini and Exiled wanted me to take a look at. You are first. You are first, indeed. The expected price range was $24 to $28. They're pricing their IPO at 33. And I think that this is going to go further than this, right? Like this should see 40 before it sees 20. All right. Pre-market movers. What are we looking at here? Marinus Pharma is up 300%. SPI is up 300%. Marinus has had quite the little run here. Morning. How you doing, Caps? This has had quite the little run here. Oh, it's a reverse split for 1 to 4. Okay. But this news here was the first driver on this. It might actually be able to hold that level. Is the IPO for Palantir today? Palantir, let's see. No, the 29th. It looks like it's next week. Yeah. Next Tuesday. Corsair, yeah, guys, I looked at Corsair. I could honestly care less about Corsair. This is not a big deal for me. Yeah. Yeah, Corsair is not a big deal. The good RX is a big deal. I will take a look at that. It's in the healthcare industry. It's in the bio industry. I am interested to see what it does. So I will pop that ticker on a watch list here. GDRX. But here we are with BlackBerry's earnings tomorrow, so I will be watching that relatively closely. Do we want to do a marbles game? Are there people actively in chat that we want to do a marbles game? Should we just be stock guys? Just do the stock thing? I think it's today. I'm live right now. Rena's in Louisiana. Ooh, Erica Falcon. Thank you so much for the sub. Yeah, definitely ask questions about ACRX whenever you want. But yeah, we can run a marbles. Let's do a marbles real quick here. Guaranteed marbles win on sub. We shall see. We shall see. Get in, guys. I'm gonna race you boys. I'm gonna race you boys. Oh, you better believe it's rigged. I never promised that this was a fair race. All right. Remember, guys, winners get to pick the ticker that we watch as we come out the gate here. Or you can ban somebody in chat. Either of those are your options. 5-minute timeout, or you can pick which ticker we watch as the market opens. Well, I'm getting cucked. Chi-Chi's has got this one, it looks like. And Ubeda, giving him a run for the money. The boost is real. It's coming in. Chi-Chi's. Oh, yours not having it, though. Yours not having it. Oh, something happened in the 2 seconds that I looked away. Somehow Chi-Chi's got dumped off the map. I don't know what happened there. Nobody's even close to Euro on this one. Oh, he's having a little bit of trouble through this, though. Oh, no. Oh, we got a race here, ladies and gentlemen. It's going to be a photo finish on this one. Oh. Look at that, like a pro. Look at that. Just said whatever and dove through that. I don't think anybody can catch him. I don't think anybody can catch him at this point. Unless he gets seriously clogged up here. Oh, Yura's coming for it. Uh-oh, Yuya. Yuya! Oh, and you better. And you better with the win. Congratulations. And you better. You better, you better, you bet. All right, what are we watching here on the market open? What do you want? You just wanted to win. All right, I mean, that works for me. All right, market is open, guys. ACRX is up again. Waiter is up. MFA is up. Space is up. Yeah, space is solid. We can watch space. Yeah, 1665 right now. Let's go to the daily instead of the So it's a decent green candle at the gate on it, really. That's a decent start. I will take that. Nice, Rampage. Nice grab, man. Yeah, I mean, Nike knows what's up. Nike knows what's up. And even if they do poorly, they fudge their numbers so that it looks good. So you're pretty much good either way with Nike. It's pretty crazy. Ugh. All right, let's go here. I just want to put out. I just want to put out notifications to a couple places here, guys. Make sure that everything's set up properly on YouTube because yesterday there were some issues. I hate it when that happens. I want people to be able to find this, but yeah, we can definitely take a look at FMCI, guys. Um, I just want to watch the first few minutes of this market to see what kind of direction we're looking at. I'm gonna pull up the 6 sheet here just so that we have kind of everything. There's Tesla, Space, Waiter, ACRX, ETM, BlackBerry, and the SPY. So the SPY I'm gonna put on 2 days so we can actually see movement. Move all these over to 2 days so we can see what's going on. We can switch to the 1 day later. But this is definitely what we're watching today, guys. I expect to see BlackBerry buy up into the day. Yeah, everything looks like it's just kind of sideways. Nothing is really making a run for it. I mean, Space made a run for it, but now it's right back down. It was up to 1670 and then just decided, nope, we out of here. And then we want to go here, and we want to go here, and I want to do um, upload the thumbnail. Yeah, I mean, Walmart's just going to get stronger and stronger and stronger as we go here, I think. Okay, so let's save that. Yeah, I mean it's a bit of a crazy start to the day here. So I was really stoked on Space. It was up at 1675. That's come back down to that 1640 range, unfortunately. Um, this was a really nice start, and then somebody was like, "Peace, I'm out of here. I'm gonna take my money and run." Um, Now, hopefully, it's just a quick profit take and we see it go back up. But yeah, not. I guess I'm not sweating it in a huge way. You know what I mean? But yeah, okay, that's better. That direction's better. ACRX options are down. Koa options are up. Space is down. ETM is up. All right, all right, all right. Well, given 1650 and rising, I think Space is going to buy back up here. BlackBerry's looking pretty solid, actually. I'm going to see if I can buy another. I'm going to see if I can buy another 1400, I think, of BlackBerry here. Maybe a grand. I'll buy a grand. What does that get me? 520 by 5, another 100 shares. Is that right? 100 shares? No, it'd be 200 shares, right? All right, take that position. See if I can't get that order filled here at the gate. Should fill. Okay, so now we've got a 600 share position in BlackBerry. All right, let's take this down. See how we're doing on tip ranks, guys. Uh, I am long on, yeah, I'm long on BB. It's not just an earnings play. Now, that's not to say I'm going to hold the entire position. I may exit some of the position on a gain towards the end of the day today as it buys up. I'll have to take a look at the BlackBerry earnings, though, to see if it's pre-market or post or aftermarket. This is looking great, up 17% on the month. Well, the SPY is down 5.5%. The best performing tip ranks portfolios are down 7. This is what happens when it's a tech heavy market and you are not tied to tech. You move completely separately from the market. It's pretty crazy. Um, Pretty crazy. So it is pre-market tomorrow. The BlackBerry earnings. So I will definitely be watching that very, very closely. What's up, Elodix? Okay, Karen, I'm going to break down ACRX. I'm going to start with FMCI because Panda threw it out there. So we'll start here. FMCI, former merger corporation. Oh, I don't think I like the sound of this, man. Panda, I don't like it. This. When I see this, the corporation does not have significant operations. I don't care. I just don't want to go anywhere near it. Oh, sorry, and you better had put up FMCI. Whenever I see that it doesn't have significant operations, I just can't do it. I cannot do it. I need to know that you've got a product or a service, and I just can't go near it. What's up, Nabu? Sam Adams. What about Sam Adams? What about Sam Adams? People like the beer. The beer is good. No, I am moving ahead. I am gonna be doing 2 streams a day, guys. I'm gonna be doing the 4:30 a.m. to 7. What's up, Jacob? Yeah, I'm gonna do the 4:30 a.m. to 7 pre-market analysis. I get to hang out with my boys from Europe and Asia that way, and then I'm gonna come back live for market open and hang out with you guys till probably about 11 or noon, depending on the day. Wednesdays tend to be a little bit slower, so I don't know what I'm going to do, but I like Sam. I'm bullish on beer for sure. All right, ACRX, how did I get to my price target? How did I get to my price target? Um, I'm saying Tesla 500 end of week. Uh, no, people can't hear you. I would let you guys know if you're live. Okay, so ACRX guys, here's the price targets that they have on this. There's a wide range of targets from $9 to $7. So some of it is their analysis. The other part of it for me is okay, given it's at $1.69 right now, what I'm seeing with ACRX is we have military contracts, Zimmer Biomet, national stockpile, increased opioid shortages, and then on top of that, uh, we've got the JDF, right? So heading into October, November, we're going to get actual numbers on their quarterly that shows that they are being adopted left, right, and center. So for me, that's okay. If we see that the hospitals are finally adopting this opioid, for me, that's double from where they are. So that takes us to 3, right? Then you've got military orders. Okay, so the military orders for me, I would add probably $1 or $2 on that, right? So let's call it 5, $6 then is kind of where we're at. And then on top of that, you've got Zimmer Biomet that comes in. Now I'm looking at, okay, well, dental elective surgeries as well. And that's probably going to take this thing to $7, $8. I personally think that there's a buyout offer that's possible as well, which could take them higher to 10. But that's kind of how I priced this out was it's a step-by-step process of, okay, I see it doubling on this news. I see it adding a couple bucks on this news. I see it doing this on this news. The big thing with this is it needs to start showing that it's selling and everything that we're seeing as far as hospitals, as far as all of that, we're seeing people buy it. People are buying the drug. So yeah, that's kind of how I got that price point. Uh, I did discuss WPRT. My thoughts on WPRT is let it simmer, let it come back down. That it's not that they're not going to get that approval. I think they're very likely to get that approval from China. So that it's back down to $1.95. I'm going to wait for it to continue to decline. Ideally, I'd love to see it come back down. Well, I had said the $2 range. So if it's at the $2 range, great. There's a great opportunity here. Good Morgan Chainmail. For airlines, I actually built out an airline portfolio. These are the airlines that I would consider playing. These are the ones that I like. I like where they are in regards to their 52-week range. They're on the low side still. I see them still declining these ones here, and I would buy them super low, knowing that on the 52-week, this is kind of where they could head back to over the next 3, 4, 5 years. So I think that's kind of where I'm at. If it's not in these 5, I took the time to actually break down a lot of airline stocks, and these were the 5 that really stuck out for me in a big way. Even UAL is not huge for me. The only reason UAL stays on there is because it has the possibility to go to 95. But I'm not sure exactly that I would even have UAL in here. I'm watching these to see them go below 10. And if they go below 10, I'll probably take a position in them. Yeah, WPRT is one that I am going to be looking to get back into. WDC. See, this is the tech play again, and tech is just not an industry that I dabble in very much. Um, so yeah, when you look at tech, I guess what's it counting as tech? It must be counting. I mean, ACRX is healthcare. It's got to be counting. Well, I guess BlackBerry is tech. LPL, I guess, is tech. But I don't really have a lot of deep insight into the tech industry. Um, I don't know why this is worth what it is. This is crazy. Ant Group. So this is Jack Ma's financial thing that he's setting up. You guys remember Alibaba? Well, he's taking control. He has majority control of Ant Group. He's looking at a $17.5 billion valuation on this IPO. Absolutely nuts. Yeah, Corsair and GoodRx are both today. I've got GoodRx ready to go. I'm just waiting for it to be unhalted. Yeah, yeah, they are both really. I mean, damn. GDRX was supposed to come out in the 24 to $28 range, and they're saying that it's probably coming out closer to the 35 range. I think Corsair with the tech and the gaming, I think it's probably going to come in much higher than that. By approaching $7 by November, yeah, that's the play. I actually see it going up beyond that. Okay, so I've got about 3 grand in by this November. By this November. When military budgets get approval, we're going to have a very clear dollar amount coming from them. Um, so a bit of a red day today. Down about $50 on the day, which isn't terrible. Um, Still profitable on BlackBerry. I think that this actually has a huge opportunity to run today. I know it's down a little bit early here, but okay. So here's the five head play that I've got in my mind with Saturday's announcement. So Saturday, Trump is putting forward his Supreme Court nominee, right? We'll probably see a vote through in the next 2 weeks on that. Maybe 3 weeks, but 2 to 3 weeks, we're going to see a vote come through on that. Now, if we have a right leaning Supreme Court, what's the big case that's headed to the Supreme Court in the next 2 to 3 months? There's a massive case that's headed there. Anybody? Nope. No, it's not the abortion. No. Abortion they've already ruled on. That's done. It's not guns. Election results is a big one, but even before the election results, it's the pipelines. It's the pipelines. They are ruling on pipelines in the next couple of months. Oil, 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 domestic oil. That's a big deal. Dakota Pipeline, Keystone Pipeline. That's a huge deal. I think Dakota is the one that they're ruling on, and that's going to set precedent for the Keystone. The Senate's already right leaning, so it's for oil. But with the removal of RBG and a new, what I can only assume will be a right leaning Supreme Court justice put in, right? I can only see this going further into the pocket of pipelines. Well, the Supreme Court nomination is Saturday. They'll be voted in sometime in October, and then the actual ruling will come after that. But I mean, it was kind of a coin toss still on oil. But I think at this point, yeah, you have to seriously look at it. Um, yeah, yeah, yeah. I really like Kinder Morgan. I think KMI is the play. Um, I don't know how far out you would have to take it. I mean, I'm sure that they have options available, but yeah, like nobody's talking about U.S. oil, right? Yeah, October would be the appointment to the Supreme Court. But and then the ruling. I think the ruling would probably come. I think if you took June of next year, you'd be okay. I don't know that that's too far. 16. This is dirt cheap. This is dirt cheap. $60 for a 16 strike on June of next year for KMI. I think that's reasonable. I don't think that's overpriced at all. Oh, okay. Yeah. Yeah. I that 16 strike for June of next year is looking mighty tasty. Just on well, I'm not looking at futures. I'm looking at Kinder Morgan. But I think we're going to see a natural recovery on oil anyway, so that's not a huge risk to go back on oil into June of next year, right? Um, hmm. It is in a decade. That's a decade away. Yeah, guys, I'm really liking the look of Kinder Morgan here. I think that one stays on the watch list. Oh, there's divvies on it as well. That's interesting. That may make it interesting for me for an equity play as well. Keystone would be bigger for Alberta crude, but I'm not trading Canadian stocks. I'm trading the American stocks. Okay, I really need TD. Okay. So SPY is down. ACRX is down. I'm break even on ACRX. What's interesting is ACRX is down, but my options are up. Space is down to 1610. BlackBerry 490. Everything looks like it's kind of down today. ETM's got a nice little buy up actually. What's that doing for me? I'm up $200 today on that, but I'm down the same on ACRX. What am I gonna do? What am I gonna do? When I play that far out, so the only thing in here that I've played kind of at that same timeline was this ACRX one, and I'm just gonna ride this. I'm gonna ride this through November. I don't know that I'll ride it right to expiry, but like my theta right now is nada. I don't have a theta decay happening right now. So the reason why I'm not too hot on the Canadian side of things is because we have an extremely left-leaning, eco-green, liberal prime minister, and I'm not a fan of that. We buy the dips, the dips. Okay, so go the 1 day on these again. Make them a little bit more visible. Yeah, about that. Waiter's quite reasonably priced right now, Rita. Waiter is quite reasonably priced right now. So you don't like money? Is that what you're saying? Guys, I really like where Waiter's at. It's 370 right now. I see it at $6 or $7 by the end of the year. So I mean, it's a decent looking double up opportunity on that, in my opinion. With that being said, I should probably put the disclaimer into chat here. So all that disclaimer says is I am just a guy. I'm not a financial expert. You don't take financial advice from me. Don't do it. Make your own decisions. Do your own due diligence. Everything that I put out here is my opinion. But yeah, there it is. So SPY's down to 330. I did see TRVN. Yeah, I'm aware of TRVN. TRVN in my mind is just another liquid IPO, a liquid opioid. It doesn't change the game for me. It just doesn't. Yeah, my issue is they don't have FDA approval, right? TRVN doesn't have the FDA approval yet. It's not. Uh, what I like about Dasuvia as a drug is it's actually solving a lot of the problems that liquid opioids cause, which is opioid abuse. Yeah, I'm not a fan of TRVN. It's not to say I'm bearish on it. It's just that I wouldn't trade it essentially. Um, what are my thoughts on Activision? Huge shout out to all you guys over on YouTube. Activision. Okay, so what does Activision have in the pipeline? What's coming? Overwatch 2, Diablo 4. What else is coming? Okay, new Black Ops, that always sells well. Crash Bandicoot 4, Tony Hawk Pro Skater 1 and 2, that's going to sell well. Yeah, Call of Duty is just a license to print. What is this? Oh, Sekiro. Okay. Diablo, Tony Hawk, World of Warcraft, Overwatch, StarCraft. I'd love a new StarCraft game. So we know that Overwatch 2 is on the way. We know that Call of Duty has something coming out. We know that Tony Hawk 1 and 2, the remix, is coming. We know Diablo 4 is coming. Um, yeah, I think Activision is looking really, really strong, in my opinion. Um, as far as a price target would go on Activision, I don't think 100 is unrealistic over a year. I think it could go to 100. TXMD. Therapeutics MD, Health Canada. So this is why Canada is not a big deal for me. If you get an FDA approval, this goes to the moon. Hey, no problem, Big Mac. Uh, yeah, my problem with this is when you've got Health Canada giving them approval in September and it doesn't move, it's like, so apparently the only place to trade bio that's of value is Japan and the US. Yeah, this is another birth control, and the last couple birth controls have just been floppos. I don't play the contraceptive game. I don't play the birth control game. That's what they're trying to play here is this ring shaped contraceptive vaginal system. I'm not interested in progesterone. I'm not interested in these creams. I wouldn't trade this just because a sector of um it's a sector of bio that is really rife with lawsuits and terrible side effects. Um, I Yeah, anytime you start to see that contraceptive, IUD, birth control, I don't like to go near it because if something goes wrong, it goes real wrong. No, and always ask the questions. Always ask the questions. Um, but yeah, approval from Health Canada is not worth anything. It's just not worth anything. UK to host first human challenge studies for COVID vaccines. So the UK is going to take 24 healthy people and it is going to infect them with COVID intentionally to test these vaccines. That's what this is. That's what they're doing. I don't know what they're offering them, but yikes. Oh, Saki, I see that you redeemed Pick a Ticker. So let's go ahead and take a look at what it is you want to look at, which is okay. So I mean, you know, I'm not interested in that. What I'm interested in doing is having spammers piss off. If you're trying to spam a product, that's not how you sell a product. Um, come back in 5 minutes. Okay, so ETM has had a hard, sharp decline since March. It hasn't recovered to that level. And into the ad spend that's coming in the next little bit. Um, into Q4, typically, traditionally, historically, we see this stock buy up, right? Um, the CEO is buying in. He has bought in several times. There's insider buys on that. I'm not sure if there's a price analyst on this or not. It's a relatively small stock. Um, so I don't think that it would necessarily have um, anybody on it. Wow, it looks like we're going to be trading that. Okay, so did this load? Okay, so there's two analysts on it. One of them is a reiterated 5 months ago. He sees it at 2. This guy here has a 37% success rate. He's losing money on the year, and he downgraded it to a 1. In my mind, this runs up into Q4 on ad spend, government spending. At the very least, I'd like to double up on it. I think it has the potential to do more, but at the very least, I'd like to double up on it, to be honest. Did you guys hear about this Microsoft event? Starts at 11 a.m. today. Microsoft Ignite. Starts at 11 a.m. today. Is this lotteries? Is this Microsoft lotteries? Trump polls have just come out for Florida and Arizona, showing him leading in both. Two major swing states. And this is just it. People are tired of the COVID hype, and what they are dialed in on is, I want a job and I want to make money, and that's what I want to do. And that's what they're going to be voting on. It's crazy. That is what the vote is going to be on. It's not going to be on who can manage COVID or coronavirus, because they're just assuming that the vaccine is coming at this point. It's an eventuality, and there's nothing that you can really do about it until then. So what we're looking at is just bite the bullet on COVID, but let's talk about the economy and who do you think is going to get you a job? And a lot of these guys, remember, under Obama and Biden, they were unemployed. That's not what the polls are showing, man. And these polls are left-leaning polls. This is an ABC Washington Post poll. This is not Rasmussen. Like, this is a typically left-leaning poll. Yeah, ABC News and Washington Post polls have Trump up in Arizona and in Florida. That's nuts. SPY is going insane. It's down $2 on the day. I don't know about insane. Yeah, I think this is fun, guys. Remember the rule when you start to lose your mind a little bit on what's going on. I'm a big fan of you pulling out. Go back a year, okay? Just kind of see what it's done over the year. Okay, so this is pre-COVID, right? 338. Here we are at 330. COVID's still here, and we're almost at where we were before COVID. I'm okay with that. Even you want to feel even better about it, you go back 5 years and go, oh, look at that. Like, okay, all is well, all is fine. That we're not at all-time highs is true, but we don't need to be at all-time highs. Thoughts on AMWL? It is a Google-backed telemedicine company. I haven't heard of them, I don't think. Okay. Okay, so my issue with these things is this, guys. So this one sitting at this, it opened at 29.16, but then you've got GoodRx opening as well, which is a direct competitor to this. They're not both worth this much money. They're not. All right. All right, we are about an hour in here, guys. My coffee is low. I'm gonna go grab a coffee, but before I go, I'm going to leave you guys with our good friends over on Restream. So without further ado, take it away. All right, how we doing? Hopefully the audio is a little bit better today. Let's get rid of this. Again, guys, huge shout out to Restream. Big fan of what they do, how they help me get my stream going. If you are a streamer and you are not currently using Restream to hit a bunch of different platforms all at once, I do highly recommend it, guys. Yeah, I was a fan before they sponsored the stream. That they sponsored the stream makes me that much more of a fan. Definitely check them out. All right. Yeah. So SPI is this EV play, expected to run on the day. I think it will come back down significantly from where it is right now. I don't think it holds these gains. Not at all. I do not think it holds these gains. Okay. Got a 6 sheet here. Okay, so Tesla's buying back up. We're up over 400 on that. Space is kind of sideways at that 1612, 1613 mark. What was my average on that? My space is a 1626 average, which is fine. I'm okay with that. I'm down 25 bucks on it, but heading into next month, that's fine. DGLY guys, I still think that this is going to be a strong play for the next unforeseeable future. Actually, as long as there's protests going on, this is going to be a thing. Um, So he's speaking to the Indian American population. Kamala Harris, obviously being of Indian American descent or ethnicity. That's definitely a demographic that they can have some strong results in. So that makes sense that he would be doing that. Um, my thought, I mean, Powell's going to start talking. I don't know that that really moves the SPY though. I think everybody's kind of tired of Powell. He doesn't really have much to add other than he feels the government should be spending more money, right? BlackBerry is down on the day. What does a BlackBerry weekly look like? What do you guys think? Should I take a 550? Let's take a 550. What say you? Invalid parameter. Invalid parameter. What did I do wrong there? Is it in here? I got to do it. Yeah, yeah. It would be a call, not play. Pull. There. Is that going to give me the option to do it? No. Yes. No. Apparently not. Okay. Cool. All right. It won't let me do that. Oh well. Just let me know in chat. What do you think? Do it. Don't do it. Looks like a good idea. Looks like a bad idea. 550 weeklies. 550 calls on the weekly. I think they're $8 right now. Actually, I could take a five. Could take a $5 call at 19. Hmm. I'm just gonna leave that there. I'm gonna leave that. So $5 call is in at 19. We'll see if anybody will actually take me up on that. If it keeps going down, I think it's gonna crush their earnings. I think they're gonna have the phenomenal earnings, and that's gonna drive the price up. I'm gonna leave that. Yeah, I'm gonna leave that. I mean, if I honestly think it's gonna crush earnings, I guess I should go for the 550. Because I can get that cheaper. So let's do the 550. BlackBerry options 550 on the weekly. And let's do 2 at 8. All right. So I got them. Orders filled. 550 calls on the end of the week. So it's a $20 YOLO. Uh, all right. I'm okay with that. I'm comfortable with that. I think the hype into earnings is just it's gonna kick in towards the end of the day. I really do. Um, Starting to see a little bit of a buy up. ETM. I need space to come back here. And I guess it's okay because it's a few weeks out. I just hate seeing it down here. Spies 329 on the day. ACB took a hit. Where are they at? They had their earnings last night and that did not go well. Yeah, they are significantly down. All right, guys. You wanna see why I had that thought process on BlackBerry? Here it is. BlackBerry. All right. So we're gonna go here so we can see all of the news, and we're gonna make a list here of uh, all of the different partners that BlackBerry has picked up so far this year. Okay. So we have the U.S. Air Force. We have TELUS, which is a major communications provider in Canada, one of the big three. It's launching on the MEMX on the 29th. So this is the new exchange. BlackBerry is one of the few stocks that are on the exchange out the gate. There's only 7 stocks on there. BlackBerry is one of them. It's QNX technology with StradVision. StradVision is the automotive company out of Korea. We also have Desea Automotive for the safe driving experience for the Xpeng. So this is a Chinese automotive company. So South Korea Automotive, Chinese Automotive, Vodafone. So this is European Telecom. Canoe, it's an upcoming EV. They're paired with them. We have their QNX platform installed in 175 million cars. We have BlackBerry and Shopify working together on a COVID tracing app. We have BlackBerry and Bell Canada working together. We have BlackBerry and AWS. So BlackBerry and Amazon. We have. So I mean, this is all in the past year, guys. Uh, Partnerships like TELUS, Bell Canada, Amazon, and the U.S. Air Force. For me, this is a big deal. This is not a $4 stock we're talking about. Um, when you start playing with government contracts and major companies like this, as far as mobile security, phone security, web security, self-driving security, I take a look at stocks like Boeing and I go, okay, well, BA as compared to BB. What's up, Brooklyn? Boeing's up at 160 bucks, but they're grounded, they're bleeding money, and they're all over the place. Their government contracts apparently their backbone. While those big contracts for BlackBerry, in my mind, just give it a massive, massive amount of value. Uh, it's pretty crazy to me how low this is priced. They've got a market cap of $2 billion. Hmm, I think they're worth more. I think they're worth more than $4. In my mind, this should be an $8 to $10 stock. Over pairings like that, in my mind, that's what we should be looking at is an $8 to $10 stock, not a $4 stock, $5 stock. It's just not. It doesn't make sense. He's still bullish on Tesla. I agree with him. Clavington, I think you're on to something big there. I think it is going to take people realizing that, which is why I often lead my BlackBerry conversations into they don't make phones. There is definitely a stigma to the BlackBerry name. It would almost be better for them to go back to RIM Technologies. Um, okay, so Fauci heads to Senate. Johnson & Johnson vaccine enters stage 3. So J&J, like AstraZeneca, their vaccine does not need to be refrigerated or frozen, sorry, deep freeze on transport, which is what's making Moderna and Pfizer and Novavax a little bit more complicated. Um, it look, and I mean, you want to get into the conspiracy theories, guys. You can definitely do that. Uh, while the rest of the world has resumed AstraZeneca, the U.S. hasn't, and yet here's Johnson and Johnson saying, "Well, we're kind of doing the same thing as AstraZeneca, so that's why." Rest assured, guys, that uh, the UK will be doing these human trials using AstraZeneca. That's going to be a thing. Um, Sponsored by AZN. Full disclosure, I do have a position in AZN, so could you look at Energy Transfer LP? They've got a very good divvy for the current price, and I don't think they've recovered from COVID yet. I know they have a battle over their pipeline in Dakota, which could be bad news. Okay, so I just want to make sure I'm saying your name right. Iwika? Iwika? Um, if it has to do with the Dakota pipeline, I am bullish on it. And my thought process, we touched on it briefly a little bit earlier. Um, The reason why I'm bullish on it is this. Saturday, we get a Supreme Court nomination from Trump that'll probably be voted through by the Senate as of the end of October, just before November elections. At which point we will have a right leaning Supreme Court. I cannot see a Supreme Court ruling going against this pipeline. I can't see it. I'm bullish on anything that touches the Dakota, the Keystone. I like ET. Now their dividends are neither here nor there for me. This is not a huge deal, but ET is definitely one that I would. I like it. I like it. Gets the thumbs up from me. I'll throw that on here. ET. No, gotta make sure that it's not the TSX one. Hey, no problem. Yeah, I mean they're down today, so that's good. Always good to buy on the dip. Malincrot's up 8% today. GDRX has not gone live yet. WPRT is even. Everything else on my board is red today, guys. It's looking like a red Wednesday. Has Powell started speaking yet?
Created. And yet there are many of those businesses that are still struggling today that want to get back up and running that could use a second lifeline. And we have the money to do it. And what Congressman Shabbats' bill does is frees up that 138 billion so that those small
I
businesses
play ARAM,
actually not going to
Lodex.
decline.
I don't
Some
really
are
play
going to
League. I play ARAM.
in their sales, but some are declined. Let those businesses that are still struggling go a second round with that money that's sitting idle in a bank account. I would hope that the majority would bring that bill to the floor. It has tremendous bipartisan support. Article in the Hill today talking about a number of Democrats who are very interested in that bill. and yet we're not allowed to get a hearing on that bill on the House floor. We could come together and get that done. I know there are bigger issues that are being negotiated, but that negotiation's been going on for weeks. Let's take a program we already agree on and at least give a lifeline to those small businesses who are struggling while we work to get this great economic recovery.
I
back
did
on
pick a
track.
number out of my
Look forward
head,
to your
Awika.
testimony, Mr. Chairman, and with that, yield back the balance of my time.
I thank the ranking member for his statement, and I just wish to say, as we turn to our witness, Mr. Ranking Member, I've only heard one politician cast any doubt upon the scientific research being done, as well as the timeline for when this vaccine may come online. Only one that I've heard that from. I would like now to introduce our witness. Today, the Select Committee is pleased to welcome the Honorable Jerome H. Powell, Chair of the Board of Governors of the Federal Reserve System. Thank you, Chairman Powell, for being here today. Please stand so I may swear you in. Please raise your right hand. Do you swear or affirm that the testimony you're about to give is the truth, the whole truth, and nothing but the truth, so help you God? You may be seated. Let the record show that the witness answered in the affirmative. Without objection, your written statement will be made part of the record. Chairman Powell, you are recognized for your opening statement.
Thank you. Chairman Clyburn, Ranking Member Scalise, and other members of the Select Subcommittee, thank you for the opportunity to update you on our ongoing measures to address the hardship wrought by the pandemic. The Federal Reserve, along with others across government, is working to alleviate the economic fallout. We remain committed to using our tools to do what we can for as long as it takes to ensure that the recovery will be as strong as possible and to limit lasting damage to the economy. Economic activity has picked up from its depressed second quarter level when much of the economy was shut down to stem the spread of the virus. Many economic indicators show marked improvement. Household spending looks to have recovered about 3/4 of its earlier decline, likely owing in part to federal stimulus payments and expanded unemployment benefits. The housing sector has rebounded, and business fixed investment shows signs of improvement. In the labor market, roughly half of the 22 million payroll jobs that were lost in March and April have been regained as people return to work. Both employment and overall economic activity, however, remain well below their pre-pandemic levels, and the path ahead continues to be highly uncertain. The downturn has not fallen equally on all Americans. Those least able to bear the burden have been the most affected. The rise in joblessness has been especially severe for lower-wage workers, for women, and for African Americans and Hispanics. This reversal of economic fortune has upended many lives and created great uncertainty about the future. A full recovery is likely to come only when people are confident that it is safe to re-engage in a broad range of activities. The path forward will depend on keeping the virus under control and on policy actions taken at all levels of government. Since mid-March, we have taken forceful action, implementing a policy of near zero rates, increasing asset holdings, and standing up 13 emergency lending facilities. We took these measures to support broader financial conditions and more directly to support the flow of credit to households, businesses of all sizes, and state and local governments. Our actions, taken together, have helped unlock more than $1 trillion of funding, which in turn has helped keep organizations from shuttering, putting them in a better position to keep workers on and to hire them back as the economy continues to recover. The Main Street Lending Program has been of significant interest to this Select Subcommittee and to the public. Many of the businesses affected by the pandemic are smaller firms that rely on banks for loans rather than the public credit markets. Main Street is designed to facilitate the flow of credit to small and medium-sized businesses. In establishing the facility, we conducted extensive outreach, soliciting public comment and holding in-depth discussions with lenders and borrowers of all sizes. In response to feedback, we've continued to make adjustments to Main Street to provide greater support to small and medium-sized businesses and to nonprofit organizations, such as educational institutions, hospitals, and social service organizations. Nearly 600 banks, representing well more than half of the assets in the banking system, have either completed registration or are in the process of doing so. About 230 loans totaling roughly $2 billion are either funded or in the pipeline.
Just throw the spy
Main
down
Street
here while
is
we watch
intended
this,
for
guys.
businesses that were on a sound footing pre-pandemic and that have good longer-term prospects, but have encountered temporary cash flow problems due to the pandemic and are not able to get credit on reasonable terms as a result. Main Street loans may not be the right solution for some businesses, in part because the CARES Act states clearly that these loans cannot be forgiven. Our credit facilities have improved lending conditions broadly, including for potential Main Street borrowers. And the evidence suggests that most creditworthy small and medium-sized businesses can currently get loans from private sector financial institutions. Many of our programs rely on emergency lending powers that require the support of the Treasury Department and are available only in unusual circumstances. By serving as a backstop to key credit markets, our programs have significantly increased the extension of credit from private lenders. However, the facilities are only that, a backstop. They are designed to support the functioning of private markets, not to replace them. Moreover, these are lending, not spending powers. Many borrowers will benefit from these programs, as will the overall economy. But for others, a loan that could be difficult to repay might not be the answer. In these cases, direct fiscal support may be needed. Our economy will recover fully from this difficult period. We remain committed to using our full range of tools to
There's
support
a
the
storm
economy for as
coming
long as
in
needed.
from the west.
Thank you.
Thank you very much, Chairman Powell. Because we're running behind on time, Mr. Ranking Member, I would like to go out of order and recognize one of our members for his questions so that he may go on to another meeting.
Yeah, we have no objection to that, Mr. Chairman.
I now recognize Mr. Foster for 5 minutes.
Well, thank you, Mr. Chair, and hello, Chairman Powell. I would like to thank the chairman and my colleagues for letting me ask my questions early here, as I have to leave to chair a hearing on the Subcommittee on Investigations and Oversight and the Science Committee into political interference into epidemiological statistics at the CDC.
Who cares?
And I'd like to begin actually by talking about the importance of
Nobody cares about where you're
regulatory
going.
Independence. The coronavirus response provides us with two crystal clear examples of both the benefits of regulatory independence and the dangers of political interference. The independence of the Federal Reserve seems largely to have been respected during this crisis, and as a result, you succeeded in the major part of your charge to stabilize the financial system against external shocks. Unfortunately, we've also seen a tragic example of the dangers of political interference into jobs best left to experts, as tragically demonstrated by the dangerous and incompetent political interference by the Trump administration into the jobs of professional scientific staff at the CDC, NIH, FDA, and
Why are we
other public
discussing
health
that?
agencies.
That has
Tens
nothing
of
to do
thousands
with
of
why he
Americans
is
have died
here.
as a result. 4% of the world's population and 25% of the deaths, and no amount of attempts to rewrite history will change that brutal fact. Many more thousands are at risk if the public loses
I grow really tired of the Democrats. Right, exactly. What is he talking about? He is literally sitting here talking, rallying against Trump, and Powell's sitting here like, what does this have to do with me?
Stars that you have been able to do your job largely behind the firewall of independence.
Where's the question? You're supposed to be asking questions. Where's the question?
Depend on the integrity of the statistics that you need to do your job.
Is there a question?
In your testimony, you mentioned doing what you can to help our economy, an acknowledgement of the limits of the Fed's ability to help different segments of the economy
I'm in
survive.
Canada, yeah.
The intervention to minimize pain on Wall Street has been largely successful, thanks in part to the Federal Reserve's unprecedented intervention in the corporate bond market. These interventions have dramatically.
What do you think
lowered the
he's
cost of
drawing on
raising
that piece of
capitals
paper?
for large
Like,
corporations?
is it the money printer?
And these markets
he's
are
drawing
now
out the money
functioning
printer?
adequately, although perhaps distorted due to significantly underpricing risk compared to what would have happened without Fed intervention. During the previous financial crisis, we saw risk spreads over treasuries for most corporate bonds, went out to several hundred basis points and persisted for about a year.
Tic-tac-toe against
While in this
himself.
crisis,
I like it.
the
I
yield
like
spike
it.
was much smaller and disappeared promptly in response to the Fed's intervention. At the other end of the market,
On this guy's
the
head.
PPP program has been significantly successful at providing a path for survival for many of the smallest businesses.
What's the upcoming fiscal
prospect of
policy look
loan
like? John
forgiveness.
Travolta with an empty
And
wallet.
there is bipartisan support for extending that program. But there has been difficulty in crafting an appropriate program for medium-sized businesses. You know, the Fed does have a facility for small and medium-sized businesses, the so-called Main Street Lending Facility, but uptake has been rather small. In large part, this is because they're loan programs, and many businesses do not need loans. They need money to survive. But handing out taxpayer money carries many moral hazards. So my sort of open-ended question here is, what are the possible extensions and modifications to that program that you may have considered and may have discarded that might have made it more effective in delivering capital to mid-sized businesses?
What didn't you
so
do
many
that you
jobs
could have
depend?
done is the question.
Thank you, Mr. Foster. So I'll first say on the corporate credit facilities, the larger companies that have access to the bond market that market was closed down in February and March, and these are very large companies. Their businesses were severely affected by the pandemic, and our actions were in no way an attempt to relieve pain in Wall Street. They were solely focused on opening up those markets so that those companies could finance themselves and keep their workers working. And I think we've had good success in that. The two facilities we erected together really have worked to allow companies to finance themselves, not so much to borrow from us, but our backstop. And so I think we're pleased at the success we've had so far with that. You ask about Main Street. Main Street is medium-sized companies and smaller companies that sort of fall between the PPP program and the corporate credit facilities. And that's a world where lending takes place through banks. Every bank credit agreement is carefully negotiated and unique in its own ways. So there isn't the standardization that allows you to intervene quickly in the bond market. So it's very, very difficult. And the only way for the Fed to reach those companies was through the banking system. So we had to create standardized products that would meet the needs of as broad as possible a range of companies and do that in a way that was consistent with Section 13.3 and the CARES Act. As you've seen, we've had repeated waves of efforts to broaden the appeal of that program. We've done most of the things that we can think of, or basically all of the things we can think of that are clear gains we've done. We're looking to do more. The uptake is modest. You're correct in saying that, but I would say more broadly, credit is pretty broadly available in the space of small and medium-sized companies. Banks are lending.
So what he's
If
not getting
the
at here
economy
is credit is
performs worse than
readily
we
available.
expect, then
I'll mute him when I'm talking.
Main Street
so we're
will
not
be.
talking over each other. Credit is readily available, but there's a lot of mid-sized businesses that are not open to taking a credit facility because they're concerned about their ability to pay back the loan. So, I mean, it's great for him to say that there is a credit facility out there for these businesses, but the reality is they don't want to take out a line of credit.
To remain creative and to see what you can do to make that more effective.
He urges him to remain creative. Great.
Thank you very much, Mr. Foster. The chair.
Great solution.
Now
Be
recognizes
creative.
the
Can you get a little
ranking
more creative?
member, for 5 minutes.
Thank you, Mr. Chairman. I do want to give an update literally just a few minutes ago. I know I showed this chart in my opening, but literally a few minutes ago, there was an announcement that a fourth company has just been entered into phase 3 of FDA testing, and that's Johnson & Johnson. It was a drug that was showing tremendous progress during phase 2.
Mark, you're going to like that?
Just
phase 3?
less than an hour ago, we got the word that the FDA has now moved Johnson & Johnson into phase 3 of testing on a vaccine that they're seeing tremendous progress in. This is 4 different major internationally respected drug companies in America that are on the verge of a vaccine for COVID-19 that can be approved by the FDA. Again, I applaud President Trump for his leadership at putting this plan in place through Operation Warp
Okay,
Speed
the Republican
to
circle jerk
remove
is
red
just as
tape
bad
so
as the Democrat one. Let's
scientists
go.
can actually focus on
Get to the
saving
question.
lives, and this is what it's yielding. Let's continue to embrace that revolutionary pace of scientific
Powell
research.
is not a doctor. He doesn't have anything to do with the vaccines.
Chairman
He does
Powell,
not work for the
I
FDA,
want
the
to ask
NIH.
you about where we are in the economy. Clearly, as I talked before, we saw historic job creation, job growth, personal income levels increasing for people in every demographic group at every income level prior to COVID. Now we're working through this pandemic. As the whole world is dealing with it, we're trying to get through this as well. But between April and August, how many percentage points have we seen unemployment fall in America as we've started to reopen our economy?
You know, I think the official number is something like from 14 and change to 8.4% today.
Wow.
You said it in your remarks. Two things are true. One, we've really made substantial progress, and that's great to see, and faster than we expected,
Smash
frankly,
Eyes?
But there's plenty left to do.
Clearly,
From 14 to
when
8%.
you compare,
That's
let's say,
huge.
to the 2008 Great Recession, I've seen numbers that it took over 10 years for our economy to recover from that. Is that about what you've seen?
Yes, of course, that was different. This was a situation where we shut the economy down, so we had outsized loss of employment and loss of economic activity. So you would expect that the first new quarter would be good. As I say, this has been a good start to a recovery.
Right, and of course, the economy was shut down in part to make sure our hospitals weren't overrun, but also to slow the death rate. As we learned about this virus after China lied to the world, which we still ought to have a hearing on before this committee. Of all things we should be having a hearing on. It's China's role in creating this, but because of the president's action, if you look throughout the world, this is a global pandemic. It's affecting every country. We mourn every loss of life here in America.
This has nothing to do with the policy. Okay. Ask the man a question and move
all of
on.
those deaths. You look around the world, many countries actually are experiencing a higher death rate than the United States. And so that's where we need to keep doing the things we're doing to bring that number down as we are. You see these other countries that are above us. They will benefit, by the way, from the work we're doing to develop a vaccine. As we work and we put money in place to develop a vaccine, and the president's Operation Warp Speed is getting us to the brink of that, that work will also benefit all of these other countries around the world. And notice, by the way, you don't see on this list China. You don't see on this list Russia, because they won't even release their numbers. So the world doesn't really know the full impact, but as you can see, we all want to get to that place.
I feel for Paolo,
conquer
man. He's
this
got to sit
disease,
here smiling like an
fortunately,
idiot.
because of science and the
For
leadership
these
of the president.
guys to
We
actually get
are on the
around to a
brink
question of some
vaccine
kind.
to actually get around the hump, and that helps us to safely reopen the economy even more. I want to ask you about safely reopening schools, because first I'll ask, and I mentioned this in my opening, we've done a lot to help small businesses. The Paycheck Protection Program has been highly successful. If we were, for example, able to go a second round for those businesses that are still struggling, let's say 25% or more loss compared to where they were before, where they could actually go for a second round of Paycheck Protection Program relief, would that be
Only
helpful
in
to the
as
economy,
much
in your view?
as the liberal
Yes,
who
I
is
say-
here can tell you
I'll
what
say it this
Biden's
way.
tastes like, for
The returns
sure.
to making people feel safe enough to engage in ever more activities from an economic standpoint, those returns will be very high.
And safely reopening schools, and we've seen CDC protocols, American Academy of Pediatrics. There's a way to do it. Some are doing it, some aren't. Is it a benefit to the children? Is it a benefit also to the economy to safely reopen schools?
Yes, emphasis on safely. People have to feel confident, and we have to, observe those.
And people
social
can wear
distancing.
masks. You can put plexiglass. Students can be 10 feet from the nearest teacher. There's all of those standards in place. A lot of that's laid out by the president's plan. If anybody cares to read it, it's all online. You can go get it right now. So hopefully we will continue to encourage people to follow those guidelines, safely reopen, continue to encourage the great work this president's done to get us to the brink of a vaccine so that we can finally safely reopen the economy and get
Okay,
this
so
country
what was
back
the question
on track.
there? Was the
Thanks for
question-
the work you're doing? I'm sure we'll talk more about it. Mr. Chairman, I
Okay,
yield back.
so I think the question that he just
Thank you very
asked
much, Mr. Ranking Member.
was, just to recap on that one, the question that was asked was, is it profitable to the economy to reopen schools? And the answer was yes, but Paolo only got to say yes.
Be paid under the law. Now, how did the minimum loan get to be $250,000? I don't think that's in the law.
No, so we designed this program for medium-sized companies, basically, and we had if you may recall, I think we had a $2 million
So this is a good
Originally, we moved it to
question.
1
Why did they
million
put the
minimum, and we moved that to
$250,000 cap
$250,000. So
on
actually,
the loans?
the demand in the facility, there really hasn't been any under $1 million. It would be a different facility, truthfully. If we were going to try to lend money in very small chunks like that, it would, doing the due diligence on hundreds of thousands of very small loans would be a really different program. And I would tell you that it's more, that part of the market is better suited to the
Morning,
Paycheck
Dad, Harry
Protection
guy.
program. But it would be, the current facility would not work for much smaller loans. We'd have to start a new facility that had a lot less protections for the taxpayer and that kind of thing.
So with 99.7% of the money still sitting there, you don't think you can come with a program that will use the money, $1.1 trillion to try to keep people employed, try to keep businesses open? It's still sitting there.
Well, the purpose of these facilities was to reopen the private capital markets. About $1 trillion of lending has taken place just between the corporate credit facilities and the municipal facility. All of that was closed down effectively in March and April. We put these facilities in place, and now there are record amounts of borrowing happening in the corporate facilities and in that space rather, and in the muni space. We set up a facility, and then the private markets start working again. With Main Street, it's not so simple because you don't have those kind of externalities. We've worked hard to reach borrowers. Again, as I said in my opening statement, we're looking for borrowers who were in good shape before the crisis and have good longer-term prospects, but because of the pandemic, they've had a real effect, and now they can't get loans elsewhere. So that's a relatively modest group. It's in size, and we've done everything we can to reach out to them. And we are experiencing a steady flow of
kind of a sideways
borrowers, and we expect that to continue and to pick up if the economy weakens.
Space
Well, Mr. Chairman,
1610, BlackBerry 487,
call your attention to the report that we just
ACRX $1.74.
published this morning. We find that in the dual mandate that the Fed has, one of them is maximum employment. Yet, the Fed brought corporate bonds issued by companies. We found this in our report. They laid off more than 1 million workers since March. That doesn't sound like maximum employment to me. And of these companies, 383 paid dividends to their shareholders during the pandemic. Laid off over 1 million people, paid dividends to 383. 383 companies paid dividends while laying off people.
Okay, so here's my issue with this statement. He's saying that. Yeah, here we go. Paul will do it.
Very, very small amounts of bonds across 800 different issuers. And those are already outstanding bonds. We're not making loans to those companies. They're not getting a loan from us at all. We're buying from another buyer. And the reason we bought from 800 was we didn't want to be deciding which company to buy from and which not. So that's what we did. And we didn't ask these companies whether we could buy their bonds or not. I think if we'd said if we want to buy your bonds because we want to make you part of an index, they would probably have said no, and we want you to do certain things. They would have opted out. We had no basis to ask them to do anything. We didn't ask their permission. That was the point of this. It wasn't to allocate credit, and these are tiny amounts in the grand scheme of things. None of those companies sees themselves as having gotten a loan from the Fed. Again, there are 800 of them, and we're buying we're down to buying, I think, $20 million worth of bonds now daily, and we're barely present in that market at all. So I think it's the real thing is the primary market facility, which is where we were going to make loans to those companies. We've made 0 loans, and the reason is that when we set the facility,
the throne speech is largely irrelevant. The only thing that will matter whether or not he states that we're going to elections. Otherwise, it won't really affect us. The throne speech is ultimately going to have his budget, and that'll be it. Now, what he's failing to touch on here, and Powell and both this guy misunderstand, is this is wrong that they fired people, but they paid dividends, right? Well, those companies have received investments from those investors, and those dividends are owed to them in order to keep their money in. If they don't receive those dividends and they pull their money out, those companies collapse, and even more people are unemployed. So this guy really fails to understand how this process works. Yeah, he is GXO. Oh, we're muted. Sorry.
Of reopening. You got to do it in a way that's sustainable. If you look at some of the European countries right now that were doing so well a few months ago, now they've got a big outbreak. So I think it's a very difficult judgment how fast to reopen, given how urban your population is, because there seems to be a lot of spread in urban areas. So again, we have a lot of responsibilities. You've given us a precious grant of independence if we stay out of politics and stick to our knitting. And I wouldn't prejudge state and local governments and their decisions here.
But are you somewhat amazed, as I am, that the economic recovery is as strong as it is in spite of the fact that these states are still largely locked down? I think that's amazing. When the unemployment numbers have come down like they have, in spite of the fact that you got these are like 5 of the top 10, 11 states in population in the country still largely locked down.
Yeah, I don't know that they may be locked down in the sense people are working from home, but I'm not sure their GDP is lower systematically. I'd have to look at that. You think at a place like New York, you know, a lot of what's happening in New York is the financial markets and people are working from home. Their output, such as it is, will be high, even though they're still somewhat locked down.
Was the economy pretty good prior to COVID?
I would say yes. A lot
Great.
to like about a tight labor market, a lot to like about 3.5% unemployment.
Yeah. It was great, wasn't it?
You know, there were always problems in an economy, but this was as good an economy as we've seen in a very long time.
Wages were up?
Wages started moving up, particularly for people at the low end of the wage spectrum, in the last couple of years. As unemployment got down and the labor market got tight, you saw the benefits going. It was, as I said, there's a lot to like about a tight labor market.
Poverty rate was down?
Yes.
Was the economy better than better for everyone in our population?
I don't know about everyone, but I would say that the benefits, and I said this recently in a set of public remarks, the benefits began to be more widely shared as unemployment got lower and lower. What you see is businesses are hiring people who haven't been successful in the labor market and pulling them in, and they're getting training. So there's a lot to like about that.
Economy was good. It was better for African Americans, Hispanic Americans. It's better for all Americans, wasn't it? Low earning Americans, higher earning Americans, wages up, unemployment down. It's better for everyone, wasn't it?
In a lot of measures, yes.
Unemployment was low
Thank you.
prior to COVID?
Yes.
Lowest in 50 years?
Lowest sustained period of since the 60s, yeah.
Here's what Secretary Mnuchin said just 2 weeks ago when he testified in front of this same committee. I believe there's no question that the reason we have unemployment high right now is that certain states are not opening up. Do you agree with Secretary Mnuchin's statement?
I cannot validate that, no. I'd have to go back and look. I'm not sure that's right.
You don't think the Secretary's right that if states would open up, unemployment numbers would come down?
You're asking me a data question, which is basically, does the unemployment rate correlate with the level of lockdown in particular states? And I've learned in my almost 9 years at the Fed.
Well, that is a financial question. This one is actually a financial
Chairman
question.
Powell, that if your state is largely locked down, not letting restaurants open and not letting things happen, not letting people go back to work, saying some businesses are essential, some aren't, it would seem just common sense if you begin to open up, unemployment is also going to come down. I think that's all the Secretary is saying. I'm just asking you to agree with Treasury Secretary Mnuchin.
Yeah, again, I'd want to look at the data. I mean, there's common sense in what you're saying, but again, I think of New York in particular, people are working from home, but they're not unemployed, so it wouldn't change things. I mean, you could, okay, look at it this way. You could reopen all the restaurants in the United States right away.
Pointless.
And you'd have technically unemployment.
Except I guess he wants it on record.
That would be a question for others.
Okay, I yield back. Thank you.
It was a relevant question. It was a
suspect,
financial question.
Mr. Chairman, we would see a flourishing of the economy with undertakers and cemeteries. With that, I'll yield 5 minutes to Ms. Waters.
Thank you very much, Mr. Chairman and members. Of course, I came here today to continue discussion with Mr. Powell of the Feds, and I'm always pleased
that's exactly
to see them, and we've worked well together. But, you know, Mr. Scalise always starts out by talking about how great the president has been in handling this pandemic, this COVID-19. He's constantly using...
Well, yeah, he wants to avoid answering in a way that
China. And China's
he doesn't have the data. He doesn't have those numbers. In fact, there's no numbers he could go check.
Find out from Mr. Scalise, I don't want to do it today, is whether or not he would advise the president and his daughter to give up the trademarks that they have with China and the business relationships they have with China in the interest of punishing China.
No, I will not yield.
Be
happy to talk about that.
In addition to that, I would like to ask Chairman Powell, did you hear that the CDC had basically issued an advisory that said that the virus could be airborne for 6 feet or more and do infections, and then they took it back within 24 hours? Did you hear that?
I'm actually having a hard time hearing you, but I don't think I did, no.
What I want to know is, did you hear about the CDC having issued a new advisory that the virus was airborne and it could infect those 6 feet away?
This is not a question that has anything to do with fiscal policy. You asking if he heard about a retracted CDC statement is not a fiscal question.
Yes, yes, I did. Sorry.
Okay, you have said that this is a health problem that we have. And while everybody is trying to dump on you about the economy and what you're doing or not doing, did you indicate ever in your speeches or in your talks that to the degree that we're able to handle the health problem, that certainly would help us with strengthening our economy? Is that true?
Pretty much every set of remarks I give, I say that the path of the economy is going to depend on our ability to retain control, to get control of the virus and keep control, and that we have the power to help that by following the advice of the experts, by wearing masks and keeping distances and that kind of thing. In fact, those things help us reopen the economy faster.
Did you also hear recently that there are some states, some of which were mentioned here this morning, where the virus is spreading, it is not subsiding? Did you know that there are some states that are in that situation?
Yes, ma'am.
And did you know that the President of the United States of America did not begin even talking about or letting the public know that we were confronted with an virus until after maybe a couple of months that he knew? Did you hear something like that?
I would have no comment on that, Madam Chair.
Thank you. Well, let me just say that when we have members who are talking about how good the president has been, how you know, the president has been a leader, and we know that we can identify several things that the president has or has not done that has caused extended problems with this virus. I think that we should pay attention to the experts and do everything that we can do to help the economy by getting a handle on the infections and the virus that has taken place. I am absolutely disturbed about the fact that someone is pushing to talk about opening up our schools when we have 40,000 students that have been infected. So having said all of that, in an answer to Mr. Clyburn about the $250,000, it was once $1 million. And so because of me and my committee, working with Ms. Velasquez, you agreed to reduce it from 1 million to 250,000. Is that right?
We did reduce it to 250,000, yes, ma'am.
Okay, and in a hearing just yesterday or so, when you were asked about this along with Mr. Mnuchin said, well, perhaps it could be reduced to 100,000 as the criteria for small businesses being able to make loans.
He's
in the
already
Main
spoken
Street
to this.
program.
Okay,
Is
so
that right?
she's not listening.
Yes, the secretary did say that.
And what you have said is,
what he said is anybody under $1 million hasn't been taking out these loans. $250,000 is the benchmark, but there's nobody sub $1 million that's taking out these loans.
about the Main Street program and how it works now. I have to tell you, while I agree with you on a lot of things, I'm really concerned about Main Street also. I'm concerned that when we think about Main Street, we really don't think about the size businesses that you have incorporated in Main Street. Some of us see those as big businesses, to tell you the truth. Would you tell us what that amount is that covers the Main Street program?
It's less than 15,000 employees, or $5 billion in revenue. That's the top end. We don't actually set a bottom end, I don't believe, in terms of size. But it was designed to go between the PPP facility, broadly, between the PPP facility and the corporate credit facilities for the big companies.
My time has expired, but I'd certainly like to continue to ask you to see what you can do to help us with our small businesses and the amount of money that is left that you have. Thank you.
Small businesses have open access to the banks for their loans. The banks are supplying those loans
Chair,
freely.
now recognized for 5 minutes, Mr. Luchtermeyer.
Thank you, Mr. Chairman. Chairman Powell, welcome. Always good to see you. Last week we had a hearing with regards to some of the state and local needs, and we had a gentleman who, Mr. Holtz-Eakin, who you probably know, who was a former CBO director, and we asked him the question about how many dollars he thought we needed to have in our budget to make whole the state and local folks. And he said that revenues are coming in on the state and local side at record revenues in 16 different states over last year with regards to sales tax revenue, but not coming in too well, obviously, with income tax revenue. To make them whole, it would take about $200 to $250 billion. So my question to you is, does that seem reasonable? Is that in the ballpark of what you would anticipate to make the state and local folks whole from the losses that we've incurred over the last several months due to COVID?
So I asked for views on that.
Okay.
It just happened to a couple of days ago, and there's actually a wide range of estimates.
Okay.
But that's certainly within the range of estimates. So you can get to a higher estimate. Of course, expenses have gone up too.
But my point is, if we're in a range of $200 to $250 billion, and we know that from the leadership on the other side, they're looking to try and do $1 trillion to $2 trillion of additional money for state and locals. That doesn't seem to be matching up with where we need to go, and seems to be the leverage point that the other side wants to use to try and hold up changes to the PPP program.
Okay, so that was
things
important.
That are necessary to keep our
So what he's saying
economy going
is
and address the needs.
the actual cost that the states have incurred, right? What is a nice balance point as far as what we put in there? Yeah, so what he's getting at is, what does it actually look like as far as the debt that state and municipal governments need in order to recover? What's a good ballpark number? 200, 250 billion and sound about right. And Powell's saying, well, that's probably a reasonable range. There are people that are saying it's much higher than that, but that is a reasonable range. He followed that question up with saying, well, if 250 billion is a reasonable range, then why in the world are the Democrats saying it's 3 trillion? Which is 12 times what we're suggesting is a reasonable number. And Powell did essentially what he's supposed to do, which is he recused himself. He said, I'm not gonna touch on that. I'm not gonna speak to that.
There, not just the ones that they laid off. And you also lose the small businesses that make parts for all these planes. And I'll give you an example. I got one plane that is made in my district, 1,800 small businesses provide parts for that. And all the employees of those small businesses would be affected. And this big business, once it gets back on its feet, will probably hire back a lot of those folks, just like a restaurant that lays off 2 people, and once it gets back going full speed again, will hire those 2 people back. Is that a fair statement, how this situation works?
Oh, very much so. Same with the auto companies.
Yeah.
A lot of big American companies have thousands of suppliers, as you know.
So it's important that we salvage these big businesses to make sure that we keep those services
So
and
that's
things
important.
going, as well as
We must support the big
maintain those
businesses,
jobs that we
and
can
by
retain
doing so,
down the road, pick up
what
the
they're getting
revenue,
at is
also
trickle
help
down
the small
economics,
businesses
right? You
that
support the
help
big guys,
that
and that
feed
money
into
flows
those
down
businesses.
into
Is that-
the rest.
Yes.
Yeah. With regards to regulatory stuff, I can't let a hearing go by without talking about CECL, so I'm sure you expected that. You probably got something in your notes. If not, you've got it off the top of your head. But to me, this is, CECL is some of the regulatory stuff as well as forbearance that has got to be playing in, I think, in your role here in this pandemic to make sure that we continue to address the credit needs of the folks across the board and make sure that the capital and reserves are not mismanaged and mishandled. Your agency, the Federal Reserve, Comptroller, as FDIC, were all part of an interim rule that was made with regards to CECL. And I think we need to continue to push this down the road. And we've proved that it's pro-cyclical. The Treasury came out with a report last week, which was kind of ambivalent about all this, which is unfortunate. But do you see that we need to continue to waive and postpone the implementation of CECL till this pandemic has passed so we can see what's going on?
I think what we've done is pretty effective. If we came to that view, we wouldn't hesitate to act. But I guess we gave companies up to 5 years to insulate themselves from the capital effects of it.
So the interim rule is 2-year delay, 3-year implement. So I mean, you guys see that there's a problem there. With regards to forbearance, again, to me, we don't want to repeat of 08 and 09 when the regulators came in and were forcing, because of their rules and regulations, to force banks to foreclose and push out some of their customers. So to me, I realize that there's some rules that can put in place, but if you have a law in place, both the banks and the regulators can point to that as guidance to be able to help them through this period to make sure that forbearance is given to make sure we don't close down industries and businesses. Would you agree with that?
Yes, I think we came in with a strong banking system, and that gives us the ability to make targeted temporary adjustments to regulation. We've done plenty of that, and I think that's just a byproduct of all the work everyone did in strengthening the system over the last
I had a long discussion today with former Chairman William Isaac, and he made the comment that back in the 70s, he was part of a group that actually went to try to help the REITs survive that period, and there was a 5-year forbearance period that was granted to the REITs to try and salvage them. It would seem to be a good way to address our needs today to make sure that we don't push businesses out of being able to do business. Agreed?
Thank you.
Thank you.
Gentleman, time has expired. The chair now recognizes Ms. Velasquez for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell. The Main Street Lending Program, as
She's on a video screen, that's why it's not great audio quality.
Small and mid-sized businesses with the purchase of up to $600 billion in loans. The program did not make any loans until July. Why did it take at the Fed 4 months to set up the Main Street Lending Program when it was able to set up credit facility for big businesses in just a few weeks?
Main Street is many times more complicated to set up because in the case of the companies that have market access, there's quite a bit of standardization in the bond market, and it was straightforward to set up that facility, and we did so very quickly. The difference is that Main Street deals with medium-sized companies who get their funding in the banking system, and every bank credit agreement for every company is basically individually negotiated. There's nowhere near the degree of standardization. So it was a much more complicated problem to solve, and it took us a lot of outreach, and we took in public comments. It took us quite a bit of work to get to where we are.
Okay, so that's important.
Okay, I hear you.
She's saying, why did it take so damn long when the big businesses were able to get their money right away? Why did Main Street lending take so long? He's saying, well, it's because big businesses all operate on the same standards. There's standard rates, there's standards loan rates, there's standards payment systems in place. All of them play by the same rules. Under that, in the Main Street lending, everybody negotiates on their own. Everybody's got their own deals, their own rates. They carry different levels of debt. They have different levels of employees. When you're looking at a business that has anywhere from $250,000 to $1 million in needs in loans, that's a big difference in businesses, right? That's a massive difference. So it's difficult. It's difficult for them to set that up because now you're trying to create a standardized rule that applies well to businesses that are $250,000 in need and $1 million in need.
To help small businesses in the CARES Act. The Fed chose instead to set up the Main Street Lending Program. Does the Fed have sufficient legal authority to provide liquidity to small businesses who still need credit assistance? To follow up on the points raised by Chairwoman Waters.
I think there was a particular Main Street facility that was outlined in the CARES Act, but that was expressly not binding on us. It said nothing in this facility shall be seen to dictate to the Fed and the Treasury in designing your own Main Street facility. And so we designed the one that we have, which is designed to be as broadly applicable as we could possibly make it.
Yeah, he's reminding her, you're not in charge of the Fed.
So,
I am.
The CARES Act told you to
Carchaito, thank you for the follow, man. Appreciate it.
Businesses that needed the assistance, but you decided to create your own facility despite having the authority, which is the issues that we're raising here. So last week, the Fed updated its guidance, telling participants that loans made in compliance with Main Street program requirements won't be faulted by examiners. Why was this change made, and how will it help encourage greater participation in the program?
We want to work with our banks to make sure that they understand that we won't run in and criticize these loans. So Main Street is supposed to be for loans that wouldn't otherwise be made. In other words, if the loan was already going to get made, then we didn't really need Main Street for that.
They asked briefly about their bond investments
to some degree,
and how that process worked, but not directly about equity. No. I don't think anybody on this panel understands that question.
And that we will not run in and criticize these things unnecessarily if you make a loan that is consistent with Main Street.
So, Mr. Chairman, will you commit today to taking a hard look at how to fix the program and even set up a new facility from scratch, as you mentioned yesterday, to help small
She's saying that it has to be fixed, and he's not at that point. He's saying it doesn't need to be fixed. It's doing what it's supposed to do.
I would say this, it would be very hard to create a facility that reaches very small businesses. And the reason is this, and that's why I think you were wise in the CARES Act to create the PPP for smaller companies, to extend credit to hundreds of thousands of very small businesses. These are largely personal loans. You know, business founders are borrowing on their credit cards or their bank line with a personal guarantee.
I hear you, but Mr. Chairman, you stated yesterday, or one of these, I don't recall when, that the coronavirus is a great increaser of inequality. Yet you decided not to collect voluntary demographic data on borrowers in the Main Street program. Will you commit to including a voluntary demographic questionnaire with loan applications going forward? How do we know?
No, you don't need demographic representation in Main Street lending.
Smaller businesses are being helped.
What are you talking about?
We did not collect that data, and we don't have any plans to do so. It's not a requirement in the law. We're really implementing the law that you passed.
Yeah, JP. Yes, JP.
That was
a mic drop.
Ms. Woloski for 5 minutes.
Thank you, Mr. Chair. Thank you, Mr. Chair.
We just did exactly what you told us to, and if you don't like it, then you screwed up.
Manufacturers of RVs and cargo trailers. In fact, 85% of the RVs you see on the road come from my area. Our community is also known among the hardest hit during an economic downturn. In fact, Elkhart County in my district had the nation's highest unemployment rate during the Great Recession. However, the coronavirus has turned that on its head. Suddenly, RVs and boats are in hot demand, so the local economy in my area has been doing incredible, all things considered. But I've still had plenty of small business and nonprofits in my district reach out to me, even in the last week, saying they still need help. Recovery is neither instantaneous nor even. That's why it's sad that Democrats, led by Speaker Pelosi, have chosen politics over our economic recovery. Let's not forget that the HEROES Act they point to is nothing more than a wish list messaging bill that had no chance of becoming law. It wasn't the product of serious negotiations or committee hearings. Instead, it's chock full of giveaways to special interests and the rich, which have nothing to do with rebuilding our economy. The HEROES Act had more mentions of the word cannabis than the words job or hire. It gave more money to state and local governments that haven't even fully spent CARES Act money, and it restored the unlimited deduction for state and local taxes or SALT. Over half the benefits of the SALT deduction go to those with annual incomes of $1 million or more, while only 1% of the benefits that go to those making under $100,000 a year. The Nonpartisan Joint Committee on Taxation found that restoring the unlimited SALT deductions for just 2 years would cost almost $137 billion. Meanwhile, the Paycheck Protection Program, which has been a vital lifeline in my district and my state for small businesses to keep the lights on and save jobs, expired last month, and Speaker Pelosi refuses to allow a vote to keep helping Main Street survive. Chairman Powell, which would you think would be better for our economic recovery? And I think you've already answered this. Giving $137 billion to the rich by restoring the SALT deduction for 2 years, or using that money to fund more PPP loans?
Again, I don't want to get into your fiscal debates with one another, but I do think small businesses would benefit from more PPP support, and I think there's probably very wide agreement on that.
We've definitely benefited in my district and my state. Chairman Powell, I think it's an understatement. I don't think it's an understatement to say that PPP was one of the most critical lifelines for small business and not-for-profits in my district. They wouldn't have survived otherwise. But 2 weeks ago, Democrats in the Senate blocked a coronavirus relief package that would have restarted PPP and added new provisions like allowing for those hardest hit to apply for a second round. Over here in the House, Republicans have filed a discharge petition to stop the political games and bring a common-sense bill to the House floor that would restart PPP, allow a second loan for those hardest hit, and simplify the forgiveness process. Chairman Powell, can you talk about what you've seen from
thanks
the
for the follow, man.
macro
Appreciate
level
that.
on PPP? And I know you've just talked about the need for a second stimulus. Should a bill that I just described, which restarts PPP, allows for a second loan, and simplifies forgiveness, be a part of that?
I guess I'd start by saying that the good economic data we've seen since really May to a significant extent reflects what you did in the CARES Act, and also just the general reopening of the economy. But those checks, the unemployment insurance, all of that really helped to keep people in their homes, keep them spending, and you know, it's a tribute to the fast and forceful response that all of you made.
BlackBerry.
And I think we helped as well. But I think the power of fiscal policy is unequaled by really anything else. I've said on a number of occasions, I think it's likely that we'll need more fiscal support.
Thanks for that, Smash.
The reason I say that
that's
is
my
we've
opinion.
still got,
BlackBerry.
in the payroll numbers, we've still got 11 million people who haven't gone back to work. If you look at broader measures of unemployment, it's actually more like 16 million who are working part-time or have left the labor force and things like that. So there's a long way to go. We've come a long way pretty quickly, and that's great, but there's a long way to go. So I just would say we need to stay with it, all of us, and the recovery will go faster if
solid earnings, great partnerships. AI is an emerging industry, and they are a leader in it as far as security goes.
Yeah, and I want to thank you for your efforts. I also want to thank the guidance and the amount of wisdom that President Trump has had in continuing to appeal for restoring and recovering of our local businesses. And I just had a call. I've had 2 calls in the last couple of days since I've been out here. One from a woman on the west side of South Bend that's a social worker running a behavior modification agency, and one from a restaurant, a 100-year-old restaurant in North Manchester. And those calls were so disturbing because what what they're asking for is that second round of stimulus. And we were hoping that we could have got that in this week while we're here. We're still hoping
JP's
we
going
can
to
get
vote
that in. I would
Republican.
just
He just
plead
can't
with
say
the
that.
Speaker Pelosi.
There's no
and
way that he
hoping
votes
that she
Democrat.
listens to these comments today.
The fiscal
that
policy of the
we've got to
Democrats is an
restore
atrocity.
and we've got to let these businesses in our districts rebound. Lives are still at stake.
He doesn't like
We are
Trump,
still
but,
looking at saving American
fiscal
lives and
policy
saving
on
American
the
livelihoods
liberal
at the same
side
time. And there is a
an
balance, but we need her
abomination.
help to actually get us there. So I yield back, Mr. Chairman. Thank you.
Oh, ouch, Chair.
Thank you, Larry, for yielding back. The chair now recognizes Mr. Kim for 5 minutes.
Thank you, Mr. Chairman and Chairman Powell. Pleasure to have you before our select subcommittee here. I wanted to just start by raising something that your predecessor, former Chairman Bernanke, had mentioned. He had said in an op-ed earlier this year that after the 2008-2009 recession, an $800 billion federal
I'll be done
program
around. Well, I'll be
authorized
done
by
when Powell's
Congress
done his
was
talk here,
partly
huh?
offset by states through cuts
I don't know what that
spending and
means either. I
layoffs.
don't
He
know
said,
when it's gonna
quote,
be done.
together with the subsequent turn to austerity at the federal level, state and local budget cuts meaningfully slowed the recovery. He actually told me in a previous hearing before this committee that an estimate he saw was that the cuts at the state and local levels led to perhaps about a half a percentage point off the growth rate at a time that the economy was trying to recover. I feel like I've heard some similar statements coming from you before, but I just wanted to confirm, do you agree with former Chairman Bernanke, his assessment that cuts to the state and local funding negatively impacted the economic recovery after the 2008-2009 recession?
Yes, so I think there's been a great deal of research on that question, and it does generally support that view.
And last week, you said that the current economic downturn is, I think, quote, the most severe in our lifetime, that it's something that's worse than what we experienced a decade ago. When I thought about Bernanke's point is, just how he's trying to frame it here. So I guess I wanted to just ask you, would our national economy right now be in a stronger position to recover from this pandemic and crisis if we could avoid state and local job cuts and slashes in the way that we saw in 2008-2009?
Well, again, I don't want to give advice to Congress on what all to do, but yes, and Chairman Bernanke also said, you may remember, that if we play our cards right, if we provide the right amount of support, in a few years, this doesn't really need to leave a permanent mark on the economy. And I would also say that your first effort, the CARES Act, was much bigger, of course, than the 2008 response. But yes, overall, I would agree that there's going to be a need for further support, and I do believe that we'll get further support. Not sure when or in what quantities or what nature, but.
No, I appreciate that. And look, I want to respect your position here, and I'm trying not to drag you into the middle of the discussions and the debates that we're having here in Congress, but just try to understand the frame by which we should be approaching this. I find that oftentimes we are talking about this as if it's solely about the support and the help that
I don't want to pull you into partisan politics, but here, let me ask you a question that's going to pull you
certainly
in the
we need
middle
to
of
be
partisan
focused on that.
politics.
You yourself have raised the point that 1 in 7 workers in our country is employed by a state or local government, about 13 million workers. That is a huge part of our workforce. So that is certainly something, and here in New Jersey, we experience it at full force. But another point that I've been just trying to highlight based off of what Bernanke said and your comments today is that this is about our country as a whole, our economy as a whole. So it's not just about helping certain states or certain cities, both red and blue, both Republican, Democrat, but it's about our national economy as a whole. So I just wanted to linger there on this front because I often hear that the criticisms are make it sound like it's trying to that they're raising concerns about money mismanagement at the state level or bailouts of pre-existing debt, arguments like that. So, Chairman Powell, I want to just dig into that a little bit. Have you seen any evidence from before, whether 2008, 2009, or the CARES Act or other situations, where funding for state and local governments during times of crisis created incentives for mismanagement?
That's really not something I've looked at.
Well, I think that that's something that we've been trying to press for and trying to understand. So I understand where you're coming from on this. But as I said, for me, I'm trying to figure out if there's a way we can square this circle here and get through this. I don't know if you would comment on whether or not there's a way to be able to provide funding for state and local governments that might be able to ensure that that money is fiscally responsibly, in a fiscally responsible way.
So that's very much in your hands to do. I honestly, we don't really bring anything to that. The idea of what form to provide, what strings to put on it is really squarely on your plate.
To your predecessor, he said that he quote that the money could be structured in a way that could eliminate that incentive. He specified that there could be things done by block grants or by formulas that don't relate to existing tax burden. Things
clearly
like
that's
that.
predicated by, in my opinion.
Is that something that you think we should be looking into?
Orsi.
It certainly sounds like a reasonable thing to look into, but as the current Fed chair, it's really not up to me to get into these questions and try to design the legislation. I think those things are very much in your
He's really good about this. I really appreciate this about Powell.
I appreciate that, and I agree completely. But your approach in helping us understand the national struggles that we might face if we don't move at the state and local level is helpful. So with that, Mr. Chairman, I turn back to you.
Thank you very much. The chair now recognizes Mr. Green for 5 minutes.
Thank you, Chairman, Ranking Member, and thank you, Chairman Powell, for testifying today. I graduated in the top of my medical school class, but barely passed econometrics at West Point, so I deeply respect you and your colleagues. I want to digress a second and discuss school closures, which I and many other physicians, educators, and behavioralists believe have drastically harmed our children. We should follow the science, and as a physician, I know the science is definitive. The CDC has stressed the importance of kids returning to school, saying, and I quote, "The harms attributed to closed schools on the social, emotional, and behavioral health, economic well-being, and academic achievement of children in both the short and long term are well known and significant," end quote. There's already extensive research on the summer slide. According to the Northwest Evaluation Association, in the summer following third grade, students lose nearly 20% of their school year gains in reading and 27% in math. By the summer after their seventh grade, students lose an average of 39% of their school year gains in reading and 50% of their school year gains in math, perhaps explaining my difficulty in econometrics. Imagine the detriment a year-long slide will have on our children. We can't allow this to happen. School closures also endanger the emotional and mental health of children. A recent article published in the Journal of Child and Adolescent
They're asking Powell about schools
post-traumatic stress scores were 4 times higher
because they're trying to lead him to is reopening schools sound economic
The CDC has added that suicides are through the roof. And in one of the scientific journals that I read as an emergency physician, just last month, the shutdowns showed an enormous increase in drug overdose and addiction at all ages. Yet, Democrats continue to call for more school closures. They seem willing to put children and parents through all of this, despite the fact that of the 587,948 children diagnosed with COVID, only 103 have died, and nearly all of them had significant medical comorbidities. Now compare that to over 6,000 suicides a year in children,
and both sides are doing
4,000 who die a year in automobile crashes.
The Democrats are trying to get him to say that a $3 trillion bill is necessary, and the Republicans are getting him to say...
We know which comorbidities put people at higher risk for COVID. We can protect
that
at-risk children with virtual learning while letting the rest go back to in-person school. We hear the left
I know Biddless for you and I standing here, 103 is like
ignoring them to keep schools
that's
closed.
Still 103 kids that have died.
Are significant. Chairman Powell,
but that's globally.
I would like to ask you, and I've kind of
so
shared
on 26 million cases,
this, what are the
103 children
impacts on these school closures?
So, 26 million.
Let me say again that these decisions get made
divided by
a lot of them at the local level.
It's the other way around, right?
I imagine you would agree that that's appropriate. You want these decisions. This is people's lives. It's their kids, and to the extent they get made as close as possible to them, That
That did not help.
That makes a lot of sense to me anyway.
I'm asking you to elaborate for us on the economic impact. What's the impact to the economy on these school closures? I just shared that there's an increase in suicide, there's an increase in opioids, there's
so that is
only 103 have died out of 580,000 that have been diagnosed.
This would be one.
I can share those numbers. I'm a physician. I'm asking you the economic impact of all these closures.
And I just want to make it clear that I do not have a judgment on the pace of school closures whatsoever. I'm not going to, I don't have one, and I wouldn't say if I did. But, you know, just as a straightforward matter.
As a government, as a political leader, you deal with bigger numbers.
Lots of people have tried to quantify that.
Unfortunately, a lot of the times you have to deal
who have to stay home
with numbers
to take care of their kids will be there.
That are lives.
As to whether
when you
that's
look
a
at
good thing
military,
or a bad
when
thing,
you look at epidemics, when you
honestly,
look at all
it has
of
to
that,
do
it's
with
difficult.
the safety of kids and teachers too, as well. You know, the teachers are probably much more at risk than the young kids are, I imagine. But nonetheless, these are decisions that are really not for the Fed. And
now, I understand the decision on whether or not to open a school. You know, I was trying to.
That's 103 globally, and of the 103 4C, there are people that had high comorbidities in the first case. So those are children that had cystic fibrosis. They had
has a downstream
HIV
in
in Africa, India.
An economic impact,
it's
as
children
well
with
as the
pre-existing
behavioral
conditions.
impact that the CDC has
By and
highlighted.
large, the COVID numbers
increase in suicides, overdoses, all that
don't
stuff.
state that children have a
in
high
light of
risk
103
for any
deaths out of
risk, really,
587,000
as far as
that
mortality
have been
goes
diagnosed.
with COVID.
Mr. Chairman, looks like
now,
I'm
whether
out of time,
they should
so
open
I
schools or not, that I'm not a proponent of, just because kids are a walking petri dish. Just because they're non-symptomatic and they won't die from it doesn't mean that they're not going to spread it to people that will. That's my bigger concern with opening schools.
Thank you very much, Mr. Chairman. Listening to our colleagues wax eloquent about how great the economy was before millions of people were thrown out of work, and before we saw spreading hunger, and before a record number of Americans are unemployed, is like listening to Herbert Hoover talk about how great the economy was before the Depression. I'm also a little surprised that they've decided to go back to China as a way to distract people.
Did he actually go back to the Great Depression? That's how far back he had to go with that reference?
This crisis.
Okay, cool.
We know that there are 37 different occasions in January, February, March, and April when President Trump praised the performance of his great friends in the autocratic Chinese Communist Party. Take, for example, January 22nd, Twitter.
I'm not sure how this is going to become a fiscal policy question here, guys. It is 11:45, so what we're going to do here is I'm going to cut this. It's been truly educational. There is some good stuff there. I think some of the good takeaways that we can have with that is we can definitely take a look at that and say that, okay, Main Street Lending Program is something that they're looking to reevaluate. There is a pile of money left in that. So should mid-sized businesses require a loan under that Main Street Lending Program, it is still there, which is, it's good to know. That's good to know. That's good to take away. In regards to does he feel statistically is it important that we see funding come back to state and federal? Yes. He did acknowledge that the 3 trillion number is about 12 times what they are actually seeing the need for. So that does allude to the House Democrats making the claim that we need $3 trillion for state government. That number is really blown out of proportion. It's too much. So that was an important takeaway. On the other side, the ability to make a direct tie between the reopening and the employment rate isn't visible. He doesn't see that statistically, and he wouldn't comment on it. So that's good to note as well. Just because certain states are still practicing social distancing and are in forms of lockdown, there's no assurance that unemployment rates would just naturally get better in the event that they open them up. So I think that's important to note as well. That the push to just reopen for the sake of the reopening isn't backed by financial data, but on the other side, the demand that we must pour $3 trillion back into state and municipal funding is also not warranted. So he did a great job of tiptoeing. I don't think GDRX is open yet, guys. I'm just going to do a final review here and get ready to pack it up on the day. Hopefully that Powell testimony was at least of some use to you guys. Clearly partisan politics is just going to be the name of the game here. BlackBerry 484 right now, heading into end of day. I expect to see a buy up into close. Power hours should be interesting. Energy Transfer, guys, this is another one to keep your eyes on. With the Supreme Court nominee coming on Saturday, probably going to see that Supreme Court nomination approved in October. That will have a right-leaning Supreme Court for the next 20 years or so. Better believe that the pipelines are going to get pushed through on Supreme Court appeal. So that makes Energy Transfer very, very appealing. I like what I'm seeing there. Entercom continues to do well. They're up 10% today. I will take a 10% gain on that. I think I made this too big. Yeah, I did. SPY's not looking great right now. It's looking a little rough into lunch. 328. Tesla 386. So it's got a long way to go into the end of the week. Space is just following the SPY. It does have a direct correlation with the SPY. They tend to mirror one another. So SPY goes down, it makes sense that Space would go down. Still pretty confident on that. You got a 325 put that you'd like to be green. I mean, who knows? I don't know that it falls that far, but yeah, I mean, it could. Who knows? My thoughts on Tesla is I'm still very bullish on Tesla, guys. Tesla 500 is reasonable over 10 years. Tesla 2000, in my mind, is reasonable over the next decade. And that's a long period of time out, so for you investing for that long, but a 930 SPY put. So as far as taking positions, guys, I did increase my BlackBerry position today. I did not take anything else, I don't think, as far as equity goes. I did take a YOLO play on BlackBerry calls. $550 calls for the end of the week. So we'll see what they do on earnings. But other than that, guys, that's it for me today. Have an amazing day. I will be back tomorrow morning, 4:30 a.m. Eastern Standard Time. I will catch you then for those that are there. And remember, guys, it will be 2 streams a day from now on, 4:30 a.m. till 7. And then I'll be back in time for the market open. I'll hang out with you guys till around 11 or noon in this case. But have an amazing day. I will see you guys later.